Afternoon, how are we all doing? Afternoon, Ian, Baggy, Amy, Harold, Fletch, JC, Julio, Hamza, hello again, Monkey Man, Virginia, again, no, I'm having deja vu. I'm sure I said hello to Virginia, must have been this morning. Morning, afternoon, even, EMAC, Neo, XR Update, News, big week, let's hope so. Afternoon, Brian, Gregors, Paul. Right. So, bit of news this morning, not a lot. Algo map. Why have you said algo map, algo map? Weird. Spam, probably a bot. So, news this morning, we've had the Empire State Manufacturing Index came out as negative 4.6, doesn't really do a lot. I don't even know what those numbers mean, to be honest, on that one. I never pay any attention to it, and it hasn't really moved. So there you go. Afternoon, Mac. So main news this morning, we had quite a bit of talk coming out of Pill for the Bank of England. Nothing particularly exciting there. Iran warning that this conflict might spill over, basically reinforcing the fact that they're on the Palestinian side, that they might get involved, blah, blah, blah. So usual stuff with conflict, everybody just beating their chests. Main news we've had this morning, though, has come out of Japan. So there's quite a bit of news coming out from Canada this morning. Interest rates are only one factor affecting Forex. We know all of this. But the main thing... where's it gone? That's not the bit I was looking for. This is the bit I was looking for. Intervention is one option when excessive FX moves are sin. We will take appropriate action when needed in the Forex market. We need to respond appropriately to odd moves in the market. So I'm not commenting on whether speculative moves are sin now. The yen is still perceived as a safe asset, along with the Swiss franc and the dollar and gold. I haven't said gold, but gold's the other one. So this is just confirmation that the Bank of Japan are keeping a very, very, very close eye on this US dollar yen. It's getting, not getting annoying for them, but it's, you know, it's within an ADR, basically. If we take out that high, that's within average daily range, easy to hit. So they're just basically reinforcing the fact that we are keeping an eye on you. If you push it, we will push you back. So basically, it's just a case of we're just letting you know we didn't do that. All right. But whatever caused it, if you push it up above here, it'll probably happen again. So basically them just making sure the US yen doesn't go any higher. iPhone sales are down. Oh, well. Apart from that, that's it. So there's no other news this morning. Just a load of stuff about the war and general FX stuff. No news this afternoon. We have got the Bank of Canada a business outlook survey coming out. We've got Harker speaking at 3:30. So this is an hour after the market open. Unlikely we're going to hang around for this, but we have got some talking head stuff coming out later. But the main news we've got is overnight with the CPI for the New Zealand dollar. Apart from that, not a lot else, really. Banhammer on Algo Map. They're not even going to Google it. I'm not even going to pay any attention to Algo Map, whoever Algo Map are. They'll probably want you to pay them some money for something that you already know, so I wouldn't bother. We're drinking a very small coffee. Look at that. My coffee actually fits on top of my microphone. It's that small. I feel like I should be doing it like this, like with just one finger and like. There we go. That's me woken up for the afternoon. Banked today, not a lot. What did I bank? Pound New Zealand. So just got out of Pound New Zealand this morning. Hasn't gone anywhere since I got out. That's the only thing I've exited today, which was that H1M5 mean reversion entry from Friday. Just got out of it today. My target was here. We had this weird, massive gap down on Pound New Zealand today, and it's just sat around and flip-flopped. So I'm quite happy to get out of that. It's only a tiny little profit, but I'm just trying to reduce a little bit of New Zealand dollar exposure, basically, because we got New Zealand dollar news overnight. I've got a lot of profit on New Zealand at the minute. I've got one there, and this is Aussie and New Zealand combined. So I've got about $600-700 I can bank, and I've got an oil position. So I'll probably bank all of that today at some point, assuming the New Zealand dollar doesn't move dramatically before that. So we've got 2 minutes to the open. I didn't get on the DAX this morning because I had nightmares with internet this morning. Well, not nightmares with the internet. Literally 2 minutes before the open, my internet dropped, and when it came back on, my computer just froze. Nothing was working. I couldn't do anything, so I completely missed the open. But the trade today was good on the open. So the pre-market range, if you're using this, is if you're using a stock index hedge EA. If you're using the ORB EA, I don't know what you would have done, but the pre-market range was too small to take today. It was lower than 221. So you would have taken the 5-minute ORB, which was within range if you're using the 10 to 20%, which is the default. Broke to the downside, never looked back. Target there was 2R. So it was a nice, easy 2R today. And that's where I said potentially might get the bounce. We did get the bounce, but it went a bit further. So not accurate, but we did bounce back out of there. And we've gone nowhere. So we are literally on the DAX back within the range we started at this morning. So just a little dip to the downside. US indices, not particularly far today. So the pre-market range, as you can see, isn't massive. It's quite big on the Dow, actually. So fair bit of movement on the Dow. All well within ADR, so there's plenty of room to go up and down. So we'll have a look at where these go at the open. Then we'll have a look at targets, basically, when we know which way it's breaking. 2 more cryptocurrency platforms are lining up to apply for retail trading licenses in Hong Kong. If you're interested in any way, shape, or form in that crypto crap. There we go. So yeah, nothing much else to bank today. ADRs we looked at this morning. Market's about to open. 5 seconds. Let's just watch the open. Oh, volatility coming in there. Wow. Okay. So no pre-markets taken. No, all the pre-market range is really tight today. So not taking any pre-market ranges today. Take the 5-minute opening range breaks. Let's just see if there's any decent moves at the open. So bear in mind this week is earnings fortnight kicking off. So with regards to earnings season, every quarter we get earnings fortnight. So we start tomorrow with Bank of America, Goldman Sachs and Johnson's pre-market. Then we've got Morgan Stanley, Procter's, Netflix, Tesla, AT&T, Blackstone, TSM, Amex. So there's some big names in there this week, but next week is the big one. So next week is the main kickoff, and then the week after that. Yeah, so this is, although I say this is earnings fortnight, it's kind of 3 or 4 weeks worth, but the actual main bulk of the earnings comes next week in this lot, and then the week after. But we start this week with some fairly big names banking and stuff. So we will get a bit of volatility coming in, and then it will kick off and get bigger and bigger and bigger. So just bear that in mind when you're looking at the indices, because they will get driven by stock purchases over the next 2 weeks. So we're breaking to the upside. If you've taken the pre-markets, tricky today. Too tight, which is why I've not taken them. But we'll wait and see what happens after this 5 minutes. So they're looking like they want to break to the upside. So let's have a look at the potential targets to the upside today. Oh, really close. So the Dow, you're looking at yesterday's high, or rather Friday's high, and last week's high, which is Thursday's high. So this area here to the upside, pretty much where we're tapping into now, is the high of last week. So last week was terrible on the Dow. If you look here, so this is Monday, Tuesday, Wednesday, Thursday. No, sorry, Monday, Tuesday, Wednesday, Thursday, Friday. So literally Monday we had a big rally. Tuesday, Wednesday, Thursday, Friday, totally sideways. We just sat there and just rotated for the entire week. So upside limit, you get a load of rejection to the upside. Look here. So downside, you're looking at Friday's low and the previous day's low, Thursday, which is ADR today. So there's lots of downside movement available today, back down to Friday's low. See if that rejects, but long way to go. The S&P, a little bit different to the Dow, lots of upside. So that's Friday's high. Then you've got ADR and that propulsion gap before Thursday's high. Friday's low is just down there. So that's well within ADR as well. Last week's low is only 125 ADR. So if it does want to put some volatile movement in today, it could really achieve last week's low today. Last week's high is easy. That's ADR. And US NASDAQ closer to Friday's low than anything at the moment. Lots of upside, 125 ADR all the way up to there. And Friday's high is ADR. So this is the big sell-off that we had on Friday, where we are now. So we might find some resistance across the board here. And it might look to retest the recent lows, but very hard to pick any direction on it. So that's where we opened last week. This is where we are now. That's the high of last week. Yeah, so we're basically bang in the middle of last week's high and low. Could go absolutely anywhere, couldn't it? So just go with the momentum, whichever way the market drives it. Tricky to pick a direction at the best times, but when you're sitting in the middle of a range, even harder. Okay, we've got 40 seconds to go. Southerners don't drink coffee like that. No, we're Southerners are very posh now. We drink lots of coffee, tea. We have the Grand Hotel down here, don't you know? Jow, VPS. What? Afternoon, John. Hamza, Leah's actually late. How about that? Late? What do you mean late? I'm not late. I'm always late. I'm always late. Streams, anyway. Right, NASDAQ broken to the upside. So there's your 5-minute range. Too big. No Goldilocks on the NASDAQ today. So not trading the NASDAQ. That's too much movement. That's over 20% of its average daily range done in that opening cash balance. S&P and Dow are taking the 5-minute range because that's not too bad. So going to trade the Dow and the NASDAQ. The S&P and the Dow this afternoon. S&P is looking like it wants to break up, but we'll see where we go from here. NASDAQ's trying to break higher. We haven't had any stock earnings today, I don't think. Oh, there you go. SEC has approved iShares Bitcoin Spot ETF. It's all about crypto crap. Don't understand any of that. Don't do any of it. What was I looking in here for? Oh, yeah, earnings. Just see if there's any earnings on stocks. Sort of miners today. There's no major stocks released. No, there's no earnings come out today. So this is just normal stock movement today. We'll see where we go. We'll have a look at the ADRs and RSIs in a minute. NASDAQ's broken long. So if you did take the pre-market on the NASDAQ, using the opening range breakout EA and the opening range breakout strategy off the pre-market 15, it's debatable whether you would have triggered short there. Depending on what your offset was, you will or you won't. If you didn't trigger short on that, well, even if you did, if you triggered short on it, you stopped out, you flipped long, and you've made more than that back. So NASDAQ, if you took the pre-market, your quid's in and done today. The other two, pre-market, look very whippy. S&P is trying to break long. There we go. Long on the S&P. So upside on that one. Yesterday's high. So just bringing my TP down within yesterday's high. So that's kind of 1.5 R, 1 3/4 R within that. Next high is up there. That isn't actually Thursday's high. That is just a point on Thursday. So Thursday's high is last week's high, which is all the way up there, which is beyond ADR. So we're looking to get out there if it continues long and we get the break long. Expect to see some limit orders triggering at that high. And then obviously if it pulls back from there and it wants to rally and go into a trend today, you'd be looking at ADR high. So I'm just going to move TP2 down pretty much to ADR. Doubt whether I'll get to that though. Got to get to the first TP yet. And it's just pulling back out the highs. So Dow, still an inside bar, not triggered yet. NASDAQ, the DAX isn't moving either. So DAX open really weak. Kind of stuck at the minute. Okay. So Dow, you've got an inside bar on the 5-minute opening cash balance. Look. So tiny little candle there. See where we go after that. Right, let's have a look at FX while we're waiting for this. So ADRs today. We had a hit on the Aussie New Zealand this morning, but that wasn't really a hit because this gapped down quite far. I'm not sure how much of that was broker spread. So I kind of said this morning, ignore that as an ADR reversal today because as you can see, within 3 hours, it was back to where it was. So either that was a gap fill or basically it was just weird broker spread. So just kind of ignored that one today. Euro Swiss. So the Swiss franc, obviously, when we've got times of crisis, money flows into the US dollar, the yen, the Swiss franc and gold, which is what we had on Friday. So Friday before market close, or basically when New York opens and pretty much during London, they bought the crap out of all of that to basically put money into those safe havens for the weekend because we weren't sure what was going to happen with the obviously war kicking off over the weekend. So safe havens got filled. Nothing happened much over the weekend apart from the usual bombing. So no ground forces gone in or anything. So the market seems to be undoing the safe haven moves a little bit today, but not too much. So this Euro Swiss was an ADR hit to the upside today as they were coming out of the Swiss franc again. So if you took that one, that was pretty good this morning. It's pushing back again though. So there's your reversal this morning. So that's all you really got out of it. It wasn't a great move. You had 160. So you had about a quarter of an ADR out of it. Not a lot, but it's not really gone anywhere. Euro pound as well. So that was an ADR hit to the upside. We tapped straight into ADR. So there's your ADR. Tapped straight into it, straight out and down. So that was a nice move. All of that there you got basically, which was half an ADR. So there's a nice little scalp there on the Euro pound and the pound Swiss. So pound Swiss was a little bit more tricky to get into because that was a big strong move this morning. So we pushed up very, very fast into ADR, slammed straight through it up to 125 ADR. So they did an A-shaped recovery on that move. So the reversal alert didn't actually trigger till there. So it's well over almost a third of an ADR basically. The reverse alert. So it wasn't really possible to get into that one today, and it's sat there and gone nowhere so far. So that's all you had on the ADRs today. There's nothing else to look at there. RSIs totally flat. So we had no RSIs this morning in the live room. The hourly was totally flat. There wasn't anything at all. We had a handful of 4-hour RSI extensions. Every single one of them was a Swiss franc. So it's the pound Swiss, it was the New Zealand Swiss, the Euro Swiss, and the CAD Swiss. Those were the only 4 RSIs on the hourly. They were only extended to the 70-30 levels as well. So you had those, which were all starting to play out. So we were talking this morning about potential V-shaped recoveries on these moves, because this is a safe haven run into the Swiss franc on Friday. And obviously nothing has escalated, so it may be a case of they pull the money straight back out again, and we just get V-shaped recoveries across the board. It is starting to happen, but not much. So I think the market's still a little bit tetchy at the moment with what's going on. This ground offensive is meant to be starting today, isn't it? So we'll wait and see what happens with those. But so there's nothing to look at on the RSIs either. So I'll go through my positions I've got open at the moment and look at those. We need to be aware of obviously what's going on this evening. So you've got 2 major news events on the Australasian pairs. You've got the New Zealand dollar CPI overnight, and then you've got the monetary policy for the Australian dollar overnight as well. So if we get bigger than expected CPI, and that is a big number, 1.9 off of a 1.1, that's a big forecast. I get the feeling they're going to miss that and the New Zealand dollar is going to weaken, but we'll see. That seems to be a hell of a big inflation move in 3 months, but we'll see. So if we get a hit on that, and then the Aussies give a positive monetary policy stance, i.e. we are looking at increasing interest rates moving forward, we could have some really big moves overnight on the Aussie New Zealand. So expect to wake up to some volatility. So anything you've got exposed Aussie and New Zealand, what I always do is anything that's in profit, basically just bank it, get it in here, because if it's in there, it's yours, you can spend it. If it's there and it turns into a negative, you've lost it. If it goes positive, that's fine. These are all going to go into profit. Doesn't matter, does it? So just bank anything you've got New Zealand wise overnight. Anything decent, basically, that you don't want to lose. Yeah. So I've got got 450, so $400, $500, $600, $700 sitting there. I might as well have that secured. And then if it all goes my way, that's fine. I don't care, do I? If it goes against me, I've got the opportunity to add these positions back on and take profit on them twice. So we'll have a look through all this in a bit. Give me a sec. So let's have a quick look at the indices, see what we're up to here. Nothing yet. Look at the Dow. Sideways, totally sideways. So with 3 inside bars on the initial open on the Dow. Slight pullback on the S&P and the NASDAQ, but going anywhere, are we? We're stuck. Main news we've got this week. First news we've got for US is retail tomorrow. CAD CPI, haven't we? Don't know. Market's just really quiet today, isn't it? Not a lot of movement. So wait and see where they go. Paolo, have I heard of PAM platform? Nope. PAM is account management. So yeah, wouldn't get involved in it. You don't want anybody else managing your account, basically. All they are signal services that actually directly link into your account. So if you're happy and you trust this complete random person you've never heard of from managing your money for you, go ahead. But personally, I'd rather keep my money in my pocket under my control. Be careful with PAM. There's a lot of, I've never heard of PAM platform, but there's a lot of long on the Dow. There's a lot of account management companies out there. My brother-in-law sent me one, and you've got to be so careful with them because they manipulate all their results and they look great on paper, but in reality, you don't get what you're given. It's the same as everything else. Any signal service you follow, a lot of signal services, they manipulate their signals. Everything's made to look good. yeah, to get you in. And a lot of the PAM services as well, any account management services, they will require you to put money into a broker of their choice, i.e. an affiliate, where they earn a kickback of every penny that's traded on your account. It's then in their interest to trade your account as much as possible, so they get as much commission as possible from the broker. Just be careful. Trade your own capital yourself. Otherwise, just don't bother. That's the way it is. Afternoon, Najor. Can't say that name. Lippy, but if you'd close those New Zealand dollar positions, then you potentially close some of the losing positions to minimize drawdown. Not at the moment. None of the New Zealand positions are in any drawdown that I'd be worried about. You could do if you wanted to. If you wanted to shut, I could shut that out and I could close 25% of that off, or I could take half of that off, use that to close that off. But this is only in 0.7% of drawdown. It's not even sort of tickling my emergency button. The only thing that I've got an emergency button on at the moment is this ready pound US. But yeah, if you want to, you can do drawdown control. You could use that to offset 50% of that. So if you close out 450 there, yeah, close out 200 of that and bring that down to 350 and bank 250. Up to you. Totally up to you. On news, though, the thing with news, it depends how you are inclined to think about the news event that's coming up. So if you're closing stuff just because you want to close it, do drawdown control. But with the Aussie Swiss, for example, here, yeah, there's the average, right? If you think about the news we've got coming out tomorrow, we've got two news events for the Aussie and the New Zealand. If they both come out as positive, this thing is going to put in 150 to 200% ADR move to the upside, yeah? So that's 100 pips from where we are at the moment. So if you look at where we are here and imagine this moving up 100 pips, yeah, we're going to be back up at the 72 moving average. Potentially. Could do. Yeah. So if I close this position out now and the news is positive, I'll be out of that one, and that one up there in profit on all of those as well as having closed that out safely and securely tonight. If the news is the opposite and it goes down by 150 to 200 ADR, I will have that in the bank. And what I can do is I can add that on again somewhere down here when we get a reversal of that, which brings my average to roughly where it is now, meaning that I only need a 1.5 to 2 ADR move to the upside to get myself out of the position anyway. But the difference is I've banked that. It's safe and secure. If it's good news, I'm banking that anyway. If it's bad news, I'll put that back on again. But if this was sitting in something like 1.8% drawdown or 2% drawdown, for example, then yeah, I would probably want to reduce the lot size down just to reduce the speed and the rate of drawdown against me if the news goes bad. But I've only got 4 positions on it, so I'm not at a position at the moment where I'm thinking, eek, if that goes down, I'm going to be in big trouble. If it goes down, I'm going to go into drawdown, yeah, but I'm not going to go, oh my God, I've got to get rid of this. It's not a panic attack at the moment, is it? CAD Swiss ADR. So they are piling out of this Swiss franc by the looks of things. No, they're not. This is the Canadian dollar on the march. Yeah, CAD strengthening up. It's not off the back of oil either. This is just Canadian dollar strength. Leading into tomorrow's CPI number, basically. So they're buying in anticipation of CPI increasing. Forecast is for it to stay the same year on year and to come down. Sorry, where's the month? And to come down month on month. Yeah. So the Canadian dollar, they're anticipating roughly the same overall. But they're anticipating it to have dropped this month. So if that comes out higher than expected, we're going to see a rally in the CAD. So they may be buying into the fact that they're not forecasting that to be a zero. They're forecasting it to be higher than expected. So they may be buying into the CAD at the minute just to US dollar is also rallying, which means the indexes will be dropping. No, they're not. Blimey. Not going anywhere, are we? 20 minutes totally sideways on the Dow. So we've got some more strength coming through on the US. There's a load of crypto stuff going on. This is probably what's causing all this. This is, I don't know what this is. Something to do with crypto licensing to BlackRock, basically. It's false. Causing a bit of volatility to come in, I think. But so yeah, so this just looks like buying in the US dollar at the minute to me. Canadian dollar, however, is stronger than the US. So this US and CAD movement we've got going on at the moment, the Canadian dollar is actually the stronger party of the two. So CAD obviously rallying fairly hard at the minute across the board, which isn't good because I've got exposure mainly short on that. But anyway. Okay, Dow's starting a break to the upside. Right, so we are buying into resistance at yesterday's high, and we're buying into resistance at last week's high. So it's going to take quite a move to get through this. You got daily and weekly limit order triggers firing here, trying to hold this down at the moment, which is probably why we've not gone anywhere. And this is new highs, basically, that we're putting in. So if you look at the Dow, where we are at the moment, this is recent highs that we're sitting at now. This resistance here, potentially. Yeah. So if we can get out of this level, we might find some limit orders triggering off of this area here. But other than that, we've got free reign basically now until we get up to 150 ADR. So there's plenty of upside room on this Dow if we can get a break. So the next resistance that would probably pay attention to would be 150 ADR. So if we can get this level broken today, we'll probably get a pop. So I'm going to leave target. I'm going to leave target at 2R, which is within ADR. So if we do get through here, I would anticipate us getting a flurry, but we've got to get through this level first. This is going to be really hard to get through a weekly level. You can see they're selling it off again. Look, see, this is yesterday's highs limit order triggers. Yeah, so we tapped straight into yesterday's high and immediately rejecting it. So they're selling off yesterday's high. So we'll see if we get through it. But if we do, we're running straight into a second batch of sellers here. And if we break that one and that one, we'll be off, which means the S&P will probably rally along with the Dow. Again, not going anywhere at the moment. We're inside bar. So 5-minute opening range with 25 minutes sideways, not going anywhere at the moment. Market's got no direction whatsoever. We'll see where we go. Is the Dow your favorite index to trade? No, I don't have a favorite. It's like children. You can't have a favorite. They've all got good points. They've all got bad points. Doesn't matter. I have no favorite index. I have no favorite instrument, no FX pair, nothing. If it moves and makes money, I like it. If it doesn't, I fall out of bed with it and don't like it anymore. Trade what moves. You don't trade things because you like them more. I mean, you trade things because you like them. If you're good at them, trade them. If you're not good at them, don't trade them. But you can't have an instrument that is basically anything that makes money is good, isn't it? Dow's rejecting. So a lot of sellers coming in here, but the buyers are holding up at the moment. So we're an inside bar at the minute. Looks like it wants to go long, but we're finding a lot of resistance up here. So we'll see. Might reject. So if it rejects to the downside, we'll be looking at Friday, Thursday lows Potentially where we open today, we got the gap fill done today on the Dow. So we're watching that area for potentially getting a bounce, which is kind of high of the Globex session. Stuck, isn't it? Totally stuck today. Uh, 1.5 minutes left on this Dow. Still holding at the minute. Inside bar going on the S&P. Almost feels like we're waiting for a news event, but there isn't any. Weird. Okay, there's the low on the Dow. So we bought up the last 5-minute low there. NASDAQ starting to rally. There's a lot of volume coming in. These candles are jittery as you like today, aren't they? They're up, down, all over the place, but no direction. You get a feeling in a minute someone's just going to press the button and put a big order in, and a load of people are going to get run over in one direction or the other. Real divergence across all the indices at the moment. NASDAQ pushing, S&P stuck, Dow pushing down. So it's all over the place. Okay, so inside bar on the Dow, no direction. See if we can have another go at that double bottom. This area here, you can see, is just holding. This is the pre-market high. So this is where we got to pre-market. Pulled back, put the initial move in, which broke higher. We haven't broken down below that pre-market high. They're just buying this pre-market high up at the moment, but doesn't mean it's going to hold. Okay, come back to that in a minute. There's no point in watching it. It's not going anywhere. Right, so positions I've got on at the moment, as I say, there's nothing to look at on the RSIs at all, hourlies and 4 hourlies. As I say, the ADRs, not really a lot to look at there either. It's all a lot of Swiss franc movement today, and from what we had on Friday, which is kind of just being undone. So I went through my positions this morning. I'll go through them again. Dow's pushing up again. Trying to. The minute I've got Aussie dollar CAD, so I've got quite a lot of exposure on the Aussie and the New Zealand at the moment. So Aussie CAD got long. That's just one position at the minute. That's from the H1M5 mean reversion entry on Thursday. And obviously then we had the move on Friday as well. So we've broken down below that weekly low. Monthly low. So looking for a push back up into that propulsion gap. If we push back down below this low, I'll be adding a second position, and then targets will move back down into that propulsion gap there. So I'll just move the targets down as we get pushed further away. Aussie dollar Swiss, 4 positions on this one now from the initial entry there. So this was an H1M5 mean reversion entry again. We sat there, went sideways for 6 days, pushed down, second entry as we broke that low, looking for it to push back up again, hasn't. Accumulation, third entry, push down, fourth entry with the Swiss franc move. So if the Swiss franc does do a V-shaped recovery, obviously we're going to be back up here at some point today, tomorrow. unlikely today, looking at the price action, with the markets just sitting around at the minute, not sure what to do. So if we get an escalation in the conflict that's going on with Israel at the moment, we're going to push down, basically, because there will be more money piling into the Swiss franc. So we'll get a further continuation move down. So I need to add again onto that one, which is why basically I'm going to bank whatever I've got available to bank on the Aussie and the New Zealand today. That's the CAD Swiss. That's nothing to do with it. Just because we've got the Australian news coming out overnight as well. So that one's one of the ones that I'll be taking off, just a partial on. Aussie dollar, US dollar. First entry taken on that on Thursday, on that massive move down that we had. So we tapped into that low there, rejected, and then we pushed down and back up again from Friday back into the lows. So that's the previous weekly low. We tapped into that. They bought the weekly low up. So looking for a push back up into propulsion, up into there or up into there. I've got my target up here at the moment, which is basically just below those lows. So I'm looking for this accumulation, sort of a 2.5 day move, which was a price discovery out of the highs, which failed dramatically. That was the initial propulsion move. So if we do manage to push ourselves back up, that is where I would expect as a last point that we will start to sell back out of if we're going to continue to push down. But we're watching this area here as well. Again, this is an Aussie pair, hence the target being all the way up there. If we do get positive Aussie news out of the monetary policy report, and we do get a positive CPI figure for the New Zealand, this will do an ADR overnight, in which case there's no point in putting my target here or here, because if it's going to do an ADR, I might as well get as much as I can out of it. That's where I would expect to find some sellers. So if we do get a positive move, we're probably going to hit a wall there. So that's why the target's there. Anywhere around there, really. As you can see, it's just complete void here. So anywhere in there, basically, you could find they add more into that move. If, of course, it gets there, it might just plummet down, in which case then I'll just be adding positions on. CAD Swiss is extended. So we had first entry on this one, again, a couple of weeks ago here. We pushed up into propulsion and immediately rejected it back straight away. And then we've sat there for 5 or 6 days. The Swiss franc just had a period where it just went absolutely nowhere. We've broken down, added 2. It's in profit at the moment on that lower position. Average is there, very, very close. We're up at ADR, though, already today. So not sure we're going to push much higher than we are. And we've got to get through this accumulation. This whole area here is where we were stuck and we couldn't get through. They finally broke it, came back, tested it twice, tested it again, and then got rejected down. So this area here is probably, if we can get back to it, going to find resistance. So I'm targeting the propulsion gap. That's a little bit optimistic. However, oil, if that does continue to rally, is going to help the Canadian dollar. We've got lots of CAD news. We've got lots of euro news coming up. So there's a good possibility we might get some rallies on the Canadian dollar, which is why I'm being optimistic with the target there. But that Swiss franc, obviously, as well, if they do start to pull back out of the Swissy, that's going to help the CAD Swiss rally too. So we'll see where that one goes, but I'll play it by ear, depending on where we get to. Euro odd was an extension from Thursday. So this was the big move up. Hasn't gone anywhere. Going back into drawdown again now on this one. So the propulsion gap is holding at the moment, although this is really kind of one massive propulsion gap. This is the high we broke with that propulsion move, and it's support. So good chance that might continue to rally. However, Aussie dollar news overnight with New Zealand, we could find ourselves back down there again very quickly. So just got target kind of down at that accumulation at the minute on that one. Euro New Zealand, same thing with this one. It was an entry on the H1M5 mean reversion from Thursday. We had that weird gap down on the New Zealand. We haven't gone anywhere today. So just in from Thursday, Friday pushed up. We haven't gone anywhere. Propulsion gap target, which is a 50% retracement on the move. Pound odd. Short on this one at the moment, looking for this to come back down here. Again, this is a pound, the Australian dollar. So it's either going to go and hit target and these Aussies will all be out, or we'll have to add some more positions onto them. But that was a H1 extension. We sat sideways on this for sort of 5 or 6 days. This to me looks like a price discovery move, which will potentially fail and come back into the range. We pushed up, and very, very quickly after this move, they started to reject. So we are, with price discovery, when you come out of an accumulation or an area of balance, you either retest the high, usually, of the range and then pop off from there, or it just sort of flips around and then drops back down again into that range. And then you typically will go for a price discovery back out the bottom. So at the moment, it's looking like, obviously it's 50-50 shot. It's either going to bounce here, or it's just not able to get anywhere and it's going to drop back down again. So target is in the middle of that range, basically. If it's a failed price discovery, I'll get out. If it's not, I'll need to scale in and get out a bit later on. Pound CAD. Long on this one. Again, big, strong move down from Thursday. Got in overnight on the... this Friday. Got in overnight on this one. Not really gone anywhere today, obviously, as you can see. Target back up in that propulsion to the upside. If it continues to push down, we've got lows coming up from last week, which is also ADR. So I get a second position on there, bring the average down, and then look to get out again in this propulsion gap. That's support, which is holding at the moment. So this area here was previously supportive. We broke it. Now it's resistance. Pound CAD. Pound US. Stuck in this, waiting, still waiting. Market structure shifted, which is great. So we got a low, a high. We've broken that high. So we went for initial entry and then we failed. Now we've broken that high. We should be looking for a higher low to continue to the upside. And this is exactly where it should be from. So target for me is up in propulsion here. And that just gets me out of that. 3 months, I'll be more than happy to get out of that. New Zealand CAD, let me just quickly check the indices. Hedged on the Dow. Not going anywhere today. Market's just not going anywhere today. It's dead. So let me just readjust targets on the Dow. S&P still long only. What do you do with this today? Mess. So I'll look at Friday's low, downside for a bounce. Got the pre-market low there, which is the gap fill. It's just not going anywhere today, is it? So just have to wait and see where we go. ADR's there. Where was the high on this? It's 150, wasn't it? That's 34,335. Just leave it there. So to the upside, if we break these highs, we're going to get a pop. So I can see us easily getting to ADR today. That is a high from 3 weeks ago, but it's just within ADR. So you could look at that for a bounce potentially. Tricky to the upside, isn't it? Very tricky today. That high from 3 weeks ago is there. Look, it's not. I much prefer to get up to there. So either we'll get there and I'll take it, or it'll be a loss today, the Dow. Can't really do a lot with that today. It's just it's not going anywhere. And if you look at the ranges we've had, we're sitting up here, we're rejecting this level, but it's not actually getting any rejection, is it? It's just stuck. So looking at that level down there, basically, potentially for a bounce back to the upside, I can't see us getting out this high today. but it might do. So I'm just going to leave the targets as they are. So 5R to the upside, just under 5R to the downside. We'll either get there or we won't. If we do, brilliant. If we don't, just take the loss. S&P's breaking to the upside. So if I can get a decent profit off of the S&P and I can close that out and walk away with like $500 or something today, I think that would be an achievement considering how slow this thing is. Okay, so we're out to the upside on the S&P and the NASDAQ. New highs. Dow's trying to rally as well. So's the DAX. So the market's rallying now. It's taken long enough. Look, 5, 10, 15, 20, 35 minutes. Flat line. Totally sideways. So there you go. So there's your break to the upside. We'll see where that goes. Where did I get to? Pound odd? Pound CAD? Pound odd, short. Pound CAD. Looking for a bounce. Pound US, talked about New Zealand. So New Zealand dollar CAD. So got long on this one. Obviously, Canadian dollar rallying at the moment. So this one's coming down a little bit. CAD yen has just hit ADR. Yeah, so this is just Canadian dollar. Canadian is on the march, buying up the CAD ahead of CPI tomorrow. So that's coming down nicely. So second entry on that one. Already taken on Friday. So that really got embedded on Friday at that level. So we're coming down into this massive long accumulation now. So if we aren't going long from here, that's my target up in propulsion, which is a nice profit. That is based on New Zealand dollar news. 175 ADR, so looking for a big target on it. If that doesn't happen, we come down into this propulsion gap and down into this low at 175 ADR to the downside. Be adding on down here and waiting for a pullback on that move at some point. New Zealand dollar Swiss, not going anywhere. 2 positions on this one. Had a break-even exit on this morning, but didn't work out. So this is a tricky one, New Zealand dollar Swiss. So this move we had on Friday was obviously the buying into the safe haven move. Prior to that, we've had 2 days worth of drop on this. So this entire move here, we're looking for a profit take on it. So looking for a pullback 50% on it. There's plenty of room for this to go to the upside. But obviously, it's all new. It's all about the news. So tomorrow, or overnight rather, we're either going to be up there or we're going to be down there. One or the other. I don't know. It depends what the news is. So target is set basically to take advantage of the news. So 1 ADR above where we are at the moment. If we push down, obviously I'll be taking a 3rd position on it. But we'll wait and see what happens on the news on that one. And I'll be banking, obviously, as I said, that position. So if I find we're sort of flip-flopping around here, that just comes off and then hopefully we'll push up. So I'll move the TP up above that position. In fact, I might leave it where it is. So I'll take this one off somewhere around here, bank that, and take maybe a $50 loss or something on that one. US dollar yen. So as I said, right, so US dollar yen's pushing up at the moment. Japanese just confirmed this morning, this morning for us, something about oil there. Something to do with Putin's visit to China. So we've had confirmation this morning from Japan that they are still watching the news. They are still watching the FX market. Any kind of movement that we don't like, we will be not intervening, but you will probably find the market will collapse. So, push above there, that's where it goes. So I'm not really worried about that pushing. In fact, I'd like it to push. It'd be lovely if we can get this pushing up there because that just means that's more likely to happen, isn't it? So shorts on that one, it's killing me. The swap on that, absolutely killing me. Nothing I can do about it. And oil. Obviously, oil longs, taken 2 off in profit already. There and there. Target on this one is at that high. Target on that one is up. We're looking for $100 a barrel plus. So that's my positions at the minute. But I don't think we're going to do an awful lot of movement until we get some of this news out of the way. So just a case of waiting, basically, for the news to kick in. Dow's decided it might want to go long. Thinking about it. Afternoon, Kennelly. US 30 really tanking? Not anymore. 1390 on the NASDAQ so far today. Good job. So S&P, we've got nothing to stop us until yesterday's high now. So we should get there today. So that should hit TP. That'll be 2,200, I think. 2,250. I've got a $1,700 hedge locked in. So if we can hit target on the S&P today, I will close both positions there, shut that down, and just take $500. The only reason I'm reticent to leave this open today is because I really don't know where this is going. If this breaks to the upside, there's nothing but clear air. So when you're looking at trades, so like for example on the S&P, I've got an obvious spot on the S&P. I can say highly likely we're going to get some limit order triggers there. If we don't, we're probably going to get some limit order triggers there. So I can look at this and forecast us hitting that, banking $2,500, shut the other one down, walk away with the money. Yeah. On the Dow, if we break those highs on the Dow, I can't see anywhere we will stop. So it makes it very difficult to forecast how to get out of that hedge because I haven't got a level on the Dow I can look at and go, well, that's probably going to get there. So what I will do is I will move my TP to there and try and get out on a pullback. There's nothing but clear air. So that's why I'd rather shut this because I've got no confidence in my ability to pick a high on that. So if I can't pick a high, I might as well walk away if I possibly can with $500 today. Assuming the S&P gives me that. If the S&P doesn't, then I'm stuffed, I don't know. But not a lot you can do. Very difficult at the minute because we haven't gone anywhere so far. So we don't seem to have any directional bias whatsoever today. We just run into that propulsion gap. Look on the S&P. That big sell order that started that sell off. Potentially they're adding back in here. Look. We'll see. We should be able to get to yesterday's high and test that level, I would think. Need some buyers on board. That's all I've got for you this afternoon, really. Analysis-wise, there's not a lot of point in doing much. We've got no RSI extensions. We're kind of sideways on a lot of stuff, or we're just undoing the moves that we had from late last week. So we got big news overnight, and then literally every day this week we've got big news. So tomorrow morning before the market opens, we've got the claimant count change. That is very hit and miss for the pound, but it does give an indication as to what unemployment rates might look like. So sometimes the market will react to it if it's a big shift. That's a big forecast as well up that they're forecasting, which means unemployment up, which means pound down. Canadian dollar CPI tomorrow afternoon is the big one. So this is what's really going to move the market tomorrow. Once we get that CPI figure, we've got retail coming out at the same time. So if we get positive CPI and positive retail, we're going to get massive moves on the CAD in the US. And then we've got Bullock speaking overnight, which we do a lot. And then we go straight into the CPI on Wednesday for the pound as well. So it's inflation week. Very, very, very important week, inflation figures, because inflation figures drive interest rates drive the market. So these are very key figures at the moment, especially as we're at terminal rate, potentially at terminal rate on everything. Everything is stalled. We've paused interest rates across the board apart from the euro, and Lagarde said that's probably what they're going to do as well. So it looks like we are at that peak. There's only one way out, down. So we'll see. But as we know, it can all flip on a dime. Things like wars, which we've got at the moment. So we'll see where we go. Big week this week. Anybody got any other pairs they want to look at? Anything else they want to discuss while we're waiting for the S&P? hit target. NASDAQ's pushing new highs of the day. That was a lovely pre-market, that NASDAQ. If you didn't get triggered on that short, I wouldn't have been triggered on it because I use a 3 pip offset, but that's 2.3, so I wouldn't have got triggered. US easing sanctions on Venezuelan oil. Oh, bloody hell. Okay, oil's coming down hard on that news. Not quite sure why they're doing that. So basically that is increased supply, which obviously means if there's more of something, it becomes less valuable. So we might get a pullback into these propulsion moves. New highs on the day on the S&P, just. Russell, I don't trade the Russell, but it'll be doing the same as the S&P and the NASDAQ. Don't even think I've got the Russell. I haven't got the Russell. Russell's too slow. Much point in trading the Russell. It's just it's 2,000 stocks. It's very, very liquid. So it's very hard to move it. Not a very good instrument a lot of the time. Much better off trading these because they're less. There's a lot more volume goes through these three than through the Russell, and because you've got less stocks moving them, you get more volatility. The Russell, because there's 2,000 stocks in it, it's very thick, hard to move. Okay, S&P's not far off the TP now. We can get one more push. Going to annoy me, aren't you? You're going to flip-flop around here for half an hour and then you're going to hit target, which is going to take all day. When you take a position off in profit because you're looking to potentially add it back later, do you look to add it back from where you initially entered? No. So the EA would put it back on for me. So these ones that I take off, so if I take this Aussie dollar Swiss off, yeah, so if I close this position off before the news tonight, the EA will add the position back for me wherever. So when we get 3/4 of an ADR away from that, the first reversal alert that we get on the 5-minute time frame, it will add it. So it will be added there, wherever it happens. So the EA is managing everything for me. It will enter the market when it sees a sign of strength from the buyers at whatever level that may be. So this is why you don't add it. So if I was to take this off now down there, for example, so if I take this buy off here, yeah, if I place a pending order down there to add it back on again, if the price comes down there, that's fine if it does that. If it does that and moves down 2 ADR against me, I've just added a position for no reason whatsoever at that level, other than that's where I had my last trade. I'm not adding positions because that's where I had my last trade. I'm adding positions when the reversal alert happens, when we get that structure break where we show the buyers are in control of the market. So if the buyers take control of the market down here somewhere, that's where I'll get in. If they take control of the market somewhere here, that's where I'll get in. I get in when there's strength going back the other way. That's the whole point of the market reversal alerts EA. It is scaling in for you at set distances as minimum set distances, but only if the buyers are on side in this case because I'm buying it, or the sellers are on side if you're selling it. You don't get in just because it's moved the distance. It's moved the distance because they're selling the crap out of it. You don't want to get in just because they're selling the crap out of it. You want to get in when they've sold the crap out of it and they've stopped selling the crap out of it. And it looks like there's buying pressure coming in. That's why we're buying, because we're expecting the people that sold the crap out of it to take profit. And at some point, they're going to take profit and add to their positions and cause a structure break, which pushes the market back in the opposite direction. A la that. So we're just looking for that to happen on this side, taking profit on that move there. But we don't know when it's going to happen. We don't know what level it's going to happen. We don't know any of that. Come on, S&P. Do you have the FTSE? Nope. I just haven't got it in my broker, the FTSE. Again, FTSE and the DAX. The FTSE moves a lot slower than the DAX. So you could trade the FTSE in the morning. There's nothing wrong with trading the FTSE in the morning. I just don't have it, so I don't trade it. But it's an index. All indexes, the whole opening range breakout strategy, or this particular variation of it, the hedging strategy, the edge of it is the open. We know that the market explodes at the open. That's the whole edge of the strategy, is that we're going to get these big, fast moves like we're experiencing today. Well, not experiencing today in this case, at that particular time. So as the FTSE opens at 8 a.m., the DAX opens at 8 a.m., these three open at 2:30 p.m., so does the Russell. You've got the Nikkei you can trade over Asia if you want to. There's the Hong Kong index. There's the France 40 opens at 8 o'clock as well. So you could trade the DAX, the France 40, and the FTSE. All indices move at the open, but they move in varying degrees. So, if, for example, you get a load of UK stocks having earnings released, the FTSE is going to move faster than the DAX. However, if all of a sudden there's big news in the motor sector, the DAX is going to move faster because it's got the 4 largest motor manufacturers in the world in the DAX index. So just getting ready to exit the shorts on the Dow when we hit target on the S&P. Okay, closing those out. Come on, S&P. There we go. Okay, out of the S&P. I'm not going to shut these down yet because it's still rallying. Just getting ready to close this out as well. Just take a bit more money out of it. Nice. That'll do me. Okay, closing the Dow. Okay, so total 1339 loss on the Dow. 2,289. Now I'm going to have to do maths. So net 950 on the day. Probably could have held that longer, obviously, and I probably could have held that because it looks like it wants to rally now, but it's guaranteed grand, isn't it? So I'll take it in case we just basically do that. If we go into rotation from here, all I'm going to end up with is just stuck in that and one win, one break even there, which is a negative day. So opportunities to take a positive day. I'm taking it. Okay, that's done. So oil, we've got potential little, oh my God, Harker's talking as well. Hamas armed wing, we fired a barrage of missiles at Jerusalem. Ukraine aid Israel as soon as functioning house is available. Fed's Harker. Fed is very likely done with rate hikes. That's negative US. Okay, so that's negative US. Let's see what impact that's having on the US. So yeah, there we go. So we've got rallies starting against the US. US dollar yen. Probably going to pause there now as well. So that's a big statement from Harker there. So we've heard this a couple of times now, and again today. Fed should hold rates steady absent turn in data. The Fed should hold rates steady absent turn in data. I think what they're trying to say there is we're going to hold steady unless the data says otherwise. So looking at the fundamentals on the US, obviously we're at the 5.5 rate at the moment. We've frozen nicely. We're at 3.7 inflation at the moment, which is 1.7 above target, which they're expecting to hit within the next 12 to 18 months. So easily achievable. Inflation has paused, hasn't gone up. Okay. And unemployment is stable. Yeah. So there's no pressure at the moment from the Fed to increase this further. The only way that they will do that is if this suddenly has an uptick. Yeah. So we go like the Canadian dollar, we uptick 0.7, and all of a sudden inflation starts to go the other way at speed. That will mean they will need to do that. But as long as everything here stays stable and there's nothing like a war to upset it, we should be starting to see now that slight downturn coming on the US, which means you'll get rallies will start. We're going back into a bear market on the stock indices. So as you see, stock market's had a little bit of a reaction to that as well. So we'll see how the market reacts to that, and we'll see whether or not we get other talking heads coming out and saying, actually, because don't forget, the same as in the UK. In the UK, we've got a board of 9 that decide on the rates, which means that there is never going to be a consensus. You can't have a consensus in a central bank, because if you've got a consensus in the central bank, nothing gets done. So in the UK, for example, we got 9 members there. So 5 of them want to hike it and 4 of them don't, we're hiking it. Yeah. You can never have 5 hiking it, 5 not hiking it. Oh crap, what do we do? Let's flip a coin. Yeah. Same in the Fed. So you've got different parties within the Fed having different opinions. Fed Harker is saying no more rate hikes. We're exactly where we want to be. Everything's looking good. As long as the data continues, we're ready to drop. You have other members of the Fed coming out saying data is looking as if it's stable. However, we see much more upside risk on unemployment, blah, 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 blah. And they will have a different opinion on it. So if you get multiple talking heads coming out of the Fed all saying, looks pretty good, we don't need to hike anymore, that would indicate that there is general consensus that won't happen. And therefore you start to get the weakness coming in. So every time you get one of these news events coming in like this, and it's like, stops the US going up higher. The US pushes, it stops it. Pushes it, stops it. You get 2 of them in a trot, and all of a sudden you've got a structure break. Everyone sees that happening and sees possibility of rate drops, and then it all starts to tumble back down the other way. So we'll see what happens, but that's good. That's negative US. Got Bank of Canada survey coming out. Oh, it's all go to this afternoon, isn't it? Woods, we're committed to having foreign bank branches in Britain. Good for us. So yeah, see where that takes us this afternoon. Might get a little bit of weakness creeping in on that US. So if you want to obviously gauge it, watch the Euro US, watch the Pound US. If these guys start rallying hard, that's probably US dollar weakness coming in. That's it. Up to date on chat. That's good, isn't it? That's what we like. And the stream held up all afternoon. This morning was a nightmare, but we got there in the end. Right. So that's all I got for you today. Done nicely there. Should have held that longer. Could have. I could have got out of that with a break even, actually, by the looks of things. So where I exited there, it's actually done pretty much the range. So that would have given me a break even exit if I'd have held it, but you never know, do you? So Take the money when you can take the money. Yeah, overnight, be aware of New Zealand. Any exposure you've got on the New Zealand dollar, either do what you want to do with it, but protect it, take it, whatever you want to do. But be aware that we've got a lot of overnight news movement potentially on those. It might do nothing. We might get as expected results. The Aussie monetary policy statement may come out as completely wishy-washy and no guidance whatsoever, in which case then nothing will go anywhere. We'll probably get a whipsaw at least, but we may get no directional bias. So don't count on movement, but be aware of it. There is a possibility. So I'd much rather have it in the bank so that I can spend it than have it disappear into drawdown. And then tomorrow morning before I come on, we've got the claimant count and the earnings index for the pound. So there's going to be volatility pre-market before 8 a.m. on the pound tomorrow. So again, pound pairs, you might find we've got ADR hits in the morning before the market opens in Frankfurt. So just be aware of that as well. All right. Anything else you need, I'll be in Telegram. Other than that, have a good afternoon, and I'll be back tomorrow morning, 7:50 for Frankfurt and 2:20 for the US session as usual. Have a good day.